Hey traders, hope you all had an awesome weekend and it was a good week in regards with trading and also in regards with natural gas. Now I know it's not a good week for all of you, especially for someone who have entered the trades with a FOMO, with the fear of missing out, or who have entered the trade late in a hope that price is now gonna reverse from here. But if you have entered the right entry, in that case, trust me, that take profit is enough for you to cut your profits. Not hang on with your trades, not being greedy, but if you're managing it, this is something I'm going to discuss later on in this video. So, as always, going to be a very important video. Understand the price action. In my last weekend's video, I've teach you how to identify the price when it wants to reverse or when it wants to break below the zones, how the price action reacts. Now it's going to be something similar, but I'm going to show you how we can enter aggressively and how we can enter in a non-aggressive way, but what are the consequences if you enter aggressively and what are the benefits if you enter in an aggressive way and non-aggressive. And I'm going to show you how some zones has played out last week, not this week, many zones played out, but the last week, few zones played out, some losing and winning trades as well. Everything is going to be very beneficial for you. So if you want to skip this part of the video, it's totally up to you. But if you want to watch this part of the video, I'm sure it's going to help you to understand trading in more depth. So let me explain you how we can enter the trade, and it is very important you watch this part of the video because it's going to reflect in today's analysis of natural gas and what to expect after this big pullback. Now, a very good example on this pair, a zone report was sent to the members on 12th of this month. If you are already in my priority group, at that time you should have received this reports already. Now, in this report, I've clearly mentioned that I'm looking at the two possible levels for the possible buy and sell trades. First, we have a level of support with the price currently inside of and we had an entry condition. Now, there are two ways you can enter the trade. Number one, enter aggressively. How is that? When you want to enter aggressively, all you want to see when the price hit your zone, you want to see some sort of condition like bullish engulfing pattern or hammer candle or 382 candles. Now I enter differently with the hammer and 382 candles. This is something my MMT course students are learning, but let me show you how we enter aggressively with a bullish engulfer. This is something you hear me talking in my every single video. Now right here, the price hit my zone, forms a bullish engulfing pattern. Now in this case, you are going to enter aggressively because right after the hit, the price forms a bullish engulfer, a bullish pressure, and right after that we say that okay, we have a bullish pressure, let's enter right away with the market order and see how it goes. Now in this type of situation, the benefit is that sometime the price just reverses and hit the next level of resistance. Otherwise, what happens? The price pushes up and then without hitting your take profit, it falls and it come back to the same level and to the same lows, which we call a rejection zone for the possible double bottom pattern. Now I'm going to show you one example of natural gas where we have a similar condition. Now in this case, if you are an aggressive trader, that is your winning trade and that has played out nicely. The price pushed up, hit your take profit of 1.4 to 1 risk to reward ratio, 1.2 to 1 risk to reward ratio, and then it hit the next level of resistance, forms another aggressive entry. Now for the double bottom, either you could have wait for the price to come back, form another bullish candle, right? And in that case, you wouldn't even have got a chance to enter the trade because your take profit has been hit and you would have missed this opportunity if you wanted to decide to enter in a less aggressive way. That is your double bottom pattern. But for aggressive trader, that is a take profit hit because you entered aggressively. Now right here, let's say you want to enter in a less aggressive way. You say, okay, I want to enter when the price hit my area of value. You want to wait for the price to form a double top pattern. Now in this case, you have an aggressive entry, which is a bearish engulfing pattern that happens at the area of value. Now in that case, it pushed down straight away without giving us any sort of pullback or any sort of formation of double top. So in that case, you would have missed your trade. Now if you would have got a double top pattern, that would be an extra confluence that price wants to push lower, and that is an extra level of security that price is going to push in your favor more likely, because then we could have got a divergence, double top, bearish pressure, a zone, lots of confluence. But this is something an aggressive entry, non-aggressive traders would have missed this opportunity. So that is how the price action work. Now I want to show you an example of natural gas, but before that, when the price come back, this is also something we can say a double bottom pattern. Now double bottom pattern is not something like this. Let's say the price just push down and it pulls back up and then you say yes, this is a double bottom. No, because the W shape must be when we have a price pushing lower in a downtrend and then the price forms a condition like this. Only then we call it a valid double bottom pattern. In this case, we are price pushing lower from here. So we were in a downtrend. In that case, that could have been taken as a double bottom if we would have got an entry condition. Now when the price breaks below the previous low, means the first bottom, in that case, the double bottom pattern entry becomes invalid because then we had a price forms a new low. In this scenario, we can still look for either an aggressive entry from here inside the zone because the zone is still intact and not broken, something like this, an entry we can still look for and keep a stop loss below, or we can still look for a double bottom pattern from the lower level. So that is how we can take a next entry. But in this scenario, we have no double bottom, and in that case, after a new low, if let's say the price push up, it forms a bearish engulfer, I will be comfortable to take my bearish trades only because then we have a new low. So that is how I look at the price action and do my analysis. Now, beginners have a bad habits of not taking their profits or entering with the FOMO when the price already pushed higher. Now, I want to show you one example of natural gas, which is right here. Now, what do you see here? Price is pushing lower, hit my rejection box, and what do we have? An aggressive entry. Now this is the trade that we already took in the priority group when we had this condition few months ago. Now at this point I entered bit below because it was already a big volume candle. I was not comfortable to enter right here, so I was comfortable to enter at the 50% of this candle, which is right here. This is my entry, which we call an aggressive entry. Now if you are looking for the reversals, we want to see a continuation and break above at least the neckline of the double bottom pattern. We had an aggressive entry. If you want to go 1.421, 221, 280 is totally up to you. Initially I go 180 from a target for commodities. Now once the price hit my take profit, yes, for aggressive traders that is a target hit. Now very important for you to manage your trades, or very important for you to take your profits, because we are still in a downtrend and we are still not sure if the price is gonna reverse. That is why very important, let's say you want to manage this trade, then use your fixed targets rather than just holding on without any sort of confirmation that where you want to exit your targets. Very important, you need to know when you want to come out of the trade, and that is a simple rule. 280 1.421, which is something like this. That is why we are in the market, to make money, maximum money, low losses. Now at this point, aggressive entry had played out, right? Now we had a pullback, push back down. Now do you see the price rejected from this rejection box, right? We have no close below this rejection box. In that case, the price formed another bullish condition. At this point, for the less aggressive trader, we have another entry right here. We keep your stop loss below this rejection box. Now at this point, if you want to look for the reversals, I want to show you some conditions. Now that doesn't mean the price just wants to reverse. We can also get hit of your take profit and continuation towards the downside. Very important for the price to break the neckline that we are now wants to push up in a trend. So at this point, how we can look at the double bottoms, right? When you enter here, the price pushes up. Now you can either push up your take profit to the neck of this pattern, which is right here. Let's say you want to manage your trade. That is maximum I would go for my trades, something like this. And you see how the price reacted from here, right? We had a pullbacks, right? That would be a moment of panic for you if you are a beginner, but I would exit my trade here. Now, after that, I want to see if the price push up and break above this neckline. With the close, we have a signal that price wants to push up in a trend, or after the break of the neckline, after the retest, we can go long. At this point, what do we have? We have a neckline formed right here. And do you see after the break of above 50 EMA, do you see any sort of bullish engulfing pattern? We have no bullish engulfing pattern right here. Nothing. But now I want to see what? Either a break of this neckline, which is right here, then that is my entry. In that case, what I'll do, I'll keep my position open here, stop loss below the neck of this pattern, right? And go 1.421, which is my fixed target, something like this. Now it requires lots of patience because these are the 4-hour candles. Now you would have to wait 1, 2, 3, 4, 5, 6, 7 4-hour candles before the price pushes up, and in that time period most of the beginners, they start to get panic and they might exit early with the fear the price is going to fall from here. Now you see how nicely the price started to push up. And what do we have after that? We have a break above, we had a pullback, and then we have a bullish candle. Now it is not one of my entry condition, but an entry for the double bottom after the break, and how nicely the price start to push up. And now we can look for a possible bullish engulfing pullback entries, which we do not have right here, but we had something. This is not one of my valid entry if you are looking at this, but the price straight away pushed up to the level of resistance. But you cut your trades right here, you cut your profits right here. This is something we need to do. Now in a recent trade of natural gas, most of you entered when the price was already pushed up with the hope that it's gonna reverse from here. Now that is something I'm going to talk about very shortly in my analysis part of the video. Now I want to show you one good example that will also help you to understand aggressive and not aggressive entries. Now at this point I want to show you both entry patterns. Now if you have seen the first example of the aggressive entry, in this case in this pair we took this trade, then the price pushes lower, hit the zone, form a bullish engulfing pattern. Now according to my stop loss rules, my initial targets was something like this, but as you can see the price pushes up, did not make it to my take profit. Now if you are an aggressive trader, you would have to wait for the price to hit your targets or hit your stop loss. But in this case the price come back and we had a rejection box ready for us. We have a price come back and we had a nice double bottom pattern with this green candle. And if you would have entered here in this scenario, your entry was a little bit lower, your stop loss was a little bit lower, and that easily hit your take profit non-aggressive entry. And if you were an aggressive trader, then you would have to wait for the price to form a double bottom, and then the price pushes up, hit your take profit for your aggressive entry. Now with this double bottom, price has formed a neckline as well, which is something I want to show you right here. Now we had a neckline. If you remember in my previous example, I've already shown you when the price break above the neckline, that is either your entry. This is something you enter something like this. Keep your stop loss below the pattern. 1.421 can be your fixed target, which is something like this, and that easily hits your take profit. And with that, an extra confidence with the push up, pull back, and we have a bullish engulfing pattern. That is also my valid entry condition from the double bottom hitting the neckline of the pattern, and that would be your entry, take profit accordingly the way I've just explained. So that is how the price action push up, and if it wants to reverse, it does not break below the low because it wants to then push up above 50 EMA and keep on pushing up and forms a condition above 50 EMA, something like this, and we have then a new trend, a start of a new trend. And as you can see, we had a start of a new trend right here, and that is enough to hit your targets. And we are not going to go that much long, but once our take profit is hit, we are out of the trades. That's why we have a rules which is very important. Set your stop losses, set your take profits. If you are not setting your stop loss and if you're not setting your take profit, then what is a point of trading? Then there's no point of trading if you just want to look at the profits, be happy for a moment, and then you see yourself in a loss, and then you are hoping the price will push up again and he wants to come out at the break even. That is not something we want to trade. We want to trade with the rules, with the exact rules of stops and target. Only then we can able to make money in the financial markets. Right here, before I continue, I want to show you a losing trade as well, because then we are above the zone, which is right here. We are above the zone and we had a price forms a nice bullish engulfing pattern. Yes, if I would have entered here, that would be a winning trade, but at this point the price pushes up, formed a bullish engulfer. We are now in between this level of support and resistance. That is why I only want to go long, as we are now above 50 and 20 EMA. The price broke above the zone. We had a pullback followed by a bullish engulfer, and that ended up as a losing trade. Not a big loss, only 19 pips losing trade for this one. That happens in trading. That is how the trading should be, with the stop loss and take profit, even though the price was almost about to hit my take profit, but unfortunately that pushes lower. That did not make me angry, but I was motivated to go for the next trade, a possible winning trade. that is something has happened exactly with the same entry condition, which is right here. And as you can see, exact same condition above 50 EMA, the price forms a bullish engulfer, but that easily hits your take profit of 40 pips, and that is how the trading should be. If you have a losses there, you can look for the next possible winning trade with the same exact condition without changing your strategy and without doubting on your strategies. A trade alert was sent to the members as well. Now we have a USD Japanese yen trade. Now this was the trade we took not this week, last week. I've added that in my winning trade as well. Now we entered in an uptrend, right? A nice uptrend, and we had a nice bullish engulfer above 50 EMA. Now this trade was a pain in the ass. We had a push up, about to hit my take profit, then we have a push down, push up, push down. Now in this process, I got lots of messages that this is something is going to reverse, but I did not doubt my strategy because there were some traders in the market out there. They draw some trend line, something like this, and they says yes, we have a strong resistance of a trend line, and then price is making new lower lows and it's gonna fall from here. This is something I was looking at the news on my telegrams, I was looking at the analyst on my LinkedIn. This is something I was watching, but I was already in the trade at that time when I was watching these analysis out of the other analyst out there. But I did not doubt my analysis. This was the trade alert sent to the members, and I was in the trade for like whole 6 days, and I did not get fearful that this guy said that his price is going to fall from here and price is making new lower lows. But my rule is when we are above 20 and 50 EMA and we are in between the zone, I'm only looking at the zone above for my possible counter trade. And now if you are managing this trade, I would like to manage it till this level of resistance. That's totally up to you, by moving your stop loss to break even or keeping your stop loss below 50 and 20 EMA just to have some room for the price to move around. But for the fixed targets, you can keep a same stop loss. It's totally up to you how you want to manage your trade. But this is something I want to show you an example of the noise in the market and not doubting your analysis, and that nicely hit 81 pips take profit for USD Japanese yen pair. So I hope you got a value out of today's lesson, and now I want to show you how the natural gas price action is moving and what mistakes we need to avoid and what to expect next out of natural gas. I'm also going to look at the weekly time frame, the daily time frame, and the 4-hour time frame, so that we have all the confluences and what to expect from here. Now, in my last few videos, I've said that we are looking to enter the buy trade from the area of value, and we already have a condition like bullish engulfer, which is a valid condition here, a valid condition here. Now if you have entered here, that also hit your take profit, you have no excuses. If you have entered here, that also hit your take profit without any excuses. 1-to-1 has easily hit your take profit. If you have managed it till this anchor level, that is also fine. It hit your take profit and then price is pushing lower. Now most of the traders, what are they looking at? The price has already formed a big candle. They say, okay, we have missed this trade. They start entering your trades here and in the hope that prices wants to push up in a trend. Now this is something I don't want you guys to do. If you missed your entry, be patient, stay calm, wait for the price to form a next condition. Now in the first part of the video, I've already shown you aggressive entries and non-aggressive entry. Now for the aggressive traders, that would have hit their take profit. Now for the not aggressive traders, we can get a possible entry after that. Now first we're going to look at the 4-hour time frame, how the price is moving. Now at this point, for double bottoms, we already have this rejection zone marked here on this platform. I'm going to go through other platforms in a very short while. I want to see a hit of my yellow box without a candle to close below these wicks. Now let me make it a bit more clear, something like this. So without a price to break and close below these wicks, if we have a break and close of this wicks, in that case I will start to look for my pullback entry bearish till we are broken below this low and the zone as well for the bearish continuation. For now, I'm still looking at a possible bullish move out of natural gas. Now for me, if we have a price to hit and come in the zone with a condition like bullish engulfer, something like this, or a 382 candle, hammer candle, if we have that, we have a strong and good entry condition. We might get a divergence in the RSI as well. In that case, we are good to go long. Now once we have that condition, I'm not going to hold on with my trade. I will use my fixed target take profit below 1.421, 1-to-1. This is totally up to you, but once my take profit is hit, I'll stay out. Now the next pattern will be, if we have this move, let's say we are in a downtrend, we have a formation of double bottom pattern, sorry. Now once we are broken above this neckline, which is right here, for aggressive entry, break and close is an entry, stop loss is below, like I've already shown in the first part of the video. If you have not seen that, please go back and check that to understand these analysis. Now, I've seen most of you in the comment section, they have said that the price is now pushing up and they have entered the trade here now. And then what happens? I've mentioned in my previous video that if we have a bullish engulfer, in that case, we're going to enter our long trade. Now, some of you have entered your buy trade here and now they're panicked. Now, I want to show you what I've said in my last video because some of you might have skipped my video. That is why you missed some small details. I want to show you what I've said in my last video so that you can understand how and what to look at for the valid conditions for your entries. So at this point, what I'm expecting from the price. So what I'm expecting, a bullish engulfer above 50 EMA. Let's say if a very next candle turns to be a bullish engulfing candle, in that case, we have a valid buy signal. Now, let's say if the candle closes back up with the wick and we have next candle as a red candle and then a green candle that closes back up, in that case, we have a valid buy signal. So I only want to see one candle close below 50 EMA. Only then I want to go for my pullback entry bullish. If we have this candle closed as a bearish engulfer, and if you have another candle closed as a bearish candle, sorry, not a bearish engulfer, a bearish candle, and then if we have a green candle, in that case, I will not take an entry. Doesn't matter if it pushes up or not. As I don't upload my videos on Friday, so that's why I want to give you a few conditions. So one condition will be bullish engulfer above 50 EMA with only one candle must close below 50 EMA. With two candles, in that case, I will have my rejection zone right here for my possible double bottom patterns. In that case, if we have a push down, I will look for a bullish condition here, bullish engulfers, hammer candles, nice ones. So I've clearly mentioned if the price after the break forms a bullish engulfer above 50 EMA and only one candle is allowed to close below 50 EMA, if that happens and we have a next candle as a bullish engulfer above 50 EMA, in that case we have a valid entry. Now in this case, how many candles do we have a close below 50 EMA? We have a one candle that closed below 50 EMA, we have second candle closed below 50 EMA, and then we have a third candle that closed back above 50 EMA. That invalidates my rule of a valid pullback entry. Now if you have entered here, that is a wrong entry because I've already clearly mentioned in my last video that this is not my entry type. Now if you have entered like this is something I want you guys to understand and listen to the analysis without skipping a small details. An invalid bullish engulfing entry. Now here on NEMEX, if you see here, how many candles do we have closed below 50 EMA? We had one candle, we have two candle closed below 50 EMA, and the third candle closed back above 50 EMA. That also makes it an invalid bullish entry. So that is what I want to clear before I move ahead in the analysis. So an invalid entry, but I've already mentioned that I'll be looking at this level for my possible bounce or for the double bottom pattern as well. So exactly something I'm still looking at. Now we can still get one entry condition I've already mentioned, a double bottom confirmation with an entry I've already mentioned, or the price is inside the zone, forms a bullish engulfer. In that case, that is a weak entry, not a strong entry. I will not take that, but it can still push up from here. If that happens, if you want to enter, you can keep a stop loss below this zone, which I've already mentioned in my yesterday's video. So keep a stop loss below if you have a bullish engulfer before the price forms a double bottom pattern here. And if the price, let's say, keep on falling down, and if you have a bullish engulfer at the lower level, that is also my valid aggressive entry. So these are the conditions now I'll be looking at closely for my possible trades for the double bottom. If we have a break above, then I want to see a retest and then a continuation, and then we can start to look at the reversals. And that is how the price action normally moves when it wants to reverse in a trend, or if it wants to break and continue to push lower in the trend. That is what we want to see with the condition, with the bullish pressure. If we have that, then we have a signal the price wants to push up in a trend. Now at this point here on this platform, if you are trading on Ovanda, I would keep my rejection box something like this. And if you have a hit of this rejection box without a candle to close below, and then I will start to look for my possible signal like bullish engulfers, double bottom, hammer candle, 382 candle bullish, and I'll keep my neckline something like this for my double bottom pattern. If we are broken above, in that case we will have an entry number 2, and then we can start to look for a new trend till the level of resistance, which is right up there, which I've already mentioned in my yesterday's video. In case you missed it, this level is for my next possible sell trade. It is 2.033 that goes to 2.169 here on Ovanda. Here on Candle.com we have 2.164 that goes to 2.314. Here on NEMEX, the next level of resistance, it is 2.018 that goes to 2.169. So these are zones you need to mark on your charts. For the support zone, I've already mentioned in my yesterday's video. Now this is something I'm looking at on 4-hour time frame for my possible entries. I'm going to go through daily and weekly as well. Now at this point here on EMEX, exactly the same market rejection box. If we have a condition, I've already mentioned, in that case we are good to go long. Neckline is right here. The next zone for sell trade is right here. Now on a daily time frame, if you look here, we are also getting a possible double bottom pattern. Now let's say if you want to trade on a larger time frame, that is also you can do. Wait for the price to hit the rejection box. Green candle, bullish engulfer, in that case that is also a valid double bottom entry. In that case we are good to go long. So this is something we can also look at on daily time frame. We already got a first bottom, a pullback, we can get a second bottom, and then the price can likely push up on daily time frame. Here on Ovanda, exactly something like this. Price is now very close to form a double bottom. In that case, if we have that, we are good to go long. Now if you look at weekly time frame, which I don't normally do, but some messages I got that we are getting an inverted hammer or 382 candle right here. But what if a next candle closes as a bullish candle? In that case, it will become a morning star, that is a reversal bullish pattern. In that case, we will have a bullish engulfer, that is also a reversal pattern. Now, just a single candle doesn't make me decide that the price wants to reverse. I want to see a combination of 3 candles at least. If you have a next candle as a bullish engulfer, in that case, the price will push up, and that is something on a weekly time frame, and that push up can be enough to hit our targets on a smaller time frame. But if you're looking at the weekly time frames, the next bullish candle will be a likely possible signal to push up and possibly reverse from here. So these are the conditions I'm looking at. These are the detailed analysis. Make sure you watch full analysis so that you won't miss a single details of the analysis and possibly avoid any sort of mistake. Now, if you have your own opinion about the market, if you say I'm wrong, please listen to your own opinion. This is just my opinion. This is how I personally trade. If you follow me, like my analysis, this is something I personally use for my own trading. Nothing should be taken as any sort of trading advice. So these are conditions now I'll be looking at for my next possible trade. Have your next zone ready for your possible sell trades only, in case we have a dramatic push up. Next we have gold. So nicely pushed up, formed a bullish engulfing pattern, and if you remember my last video, I've said that for the next head and shoulder pattern, I want to see a push up, then a push down, and then a possible continuation towards the upside. Now let me show you what I've said in my last video so that you can understand the conditions and entries below. So again, I want to see a push up to this zone. Only then I want to see a push down, then we can start to look for our entries from this area. I'll keep you informed once we have this completion of the pattern. So at this point, we are still not broken below 50 EMA. If we have a next candle as a bullish engulfing candle, that is also a valid buy signal. As long as we are getting a bullish engulfer above 50 EMA, that is a valid buy signal. Nice one. So what do we have? We have a bullish engulfing pattern, and that is a valid entry. That is enough to hit your targets. Now if you have seen my natural gas video, a good example of only one candle being closed below 50 EMA, then the next candle closed back above 50 EMA. I hope you have learned something from this example. This is something I was talking about, and we have a nice push up right here, a push up of $12. Now that is enough to hit your 1 ATR targets. Now what do we have? We have a possible completion of the head of this pattern, which is right here. Now what we can expect, if the price do not break above 2044.56, if we have no break above and close above, wick can go above. If we have a candle to close above, in that case we can look for the continuation bullish trades towards a level of next resistance, which is right up there, 2065.12, that goes to 2077.04, from where we're going to enter our sell trades with bearish engulfers, double top, inverted hammers, 382 candles bearish. But if you start to see a pullback, that pullback hit my red box, which is right here, which is something like this, 1990.84, that goes up to 2016.30, my termination zone for my next buy trade. Now if we have a price to hit this zone, and within this zone, if the price forms a conditions like this, doesn't matter if it's below 50 EMA, if the price forms a condition like this anywhere inside this zone without the price to go equal to this wick, in that case we will have a double bottom pattern. But if we are above these candles inside the rejection box, in that case we will have a valid and a completion of head and shoulder pattern with the bullish engulfers, I will keep my stop loss below, take profit 1-to-1, or this termination zone above if you want to manage it for the next trade. So these are the conditions now I'll be looking at for gold, the pullback and the bullish engulfer with my strong entry. If broken above, we are looking at the zone above, and in between that we are looking for the pullback entry bullish only. So these are the conditions now I'll be looking at for gold. Keep an eye, once we have a condition, we are good to go for our trades. For silver, is still ranging. Now we have push up out of silver. At this point we have no condition for silver. All I want to see a complete break above this high for my next pullback entry bullish. If we have that, we are good to go long and ride along with the trend to the next level of resistance, which is right up there. But if the price falls, let's say we have a good push down, in that case we have a zone below from where we can expect another push up, which is right here in blue, from where we can look for a possible entry conditions I've already mentioned in my previous just now. So these are conditions now I'll be looking at. No trades for silver, this zone and a break above this high. In that case, I'll start to look for my bullish trades and a bullish trades from here. For now, I'm not looking for any trades for silver until we have conditions, but I'm looking at this level for my possible reversals and sell trades. Last one, we have crude oil. Has now broken below 50 EMA. At this point, as you can see, a very good example. We have no break and close above this rejection box, means we are not entering the trade. Now, without any condition, let's say Umar have said that we have a possible head and shoulder pattern triggered, and if the price will break above, we are going to push up and look at the next level above. Now we have no break above, so what is the reason to enter the trade? No reason, and we are staying out of the market. So at this point, I want to see a good momentum below 50 EMA, one more red candles, a big red candles or few red candles below 50 EMA, then I'll start to look for my pullback entry bearish only and keep on taking shots till we are in the zone below, which is right here 67.28, that goes to 68.85. For now, I'm just waiting for the price to see how it goes with a good momentum. Only sell pullback trades. We can still get a push up above this termination box. If we have that, we are good to go long. For now, I'm just waiting for how the price break above this consolidation. Once we are broken above, below or above, in that case we can look for the direction. If broken below, then we are looking at the sell side. If broken above, we are looking at the buy side. So wait with patience. Once we have a breakout, in that case we can start to look for our next possible trade. So these are the conditions now I'll be looking at for commodities. Hope you got a value out of today's video. If yes, hit a like button for me. It really helps me in a YouTube algorithm. Subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green rest of the week. See you guys in the next video. Have an awesome weekend. Take care.